Hi, and welcome to our 5-minute tax update covering the local and international developments for November of 2019. We will start by looking at the most important developments in local legislation. A tax bill was recently submitted to Parliament which aims to close a loophole in the tax legislation. More specifically, under the current provisions of the legislation, the accounting profit that arises from the write-off of a non-performing bank loan is exempt from income tax, but is subject to the deemed dividend distribution provisions. This means that 70% of that profit will be subject to special defense contribution at the rate of 17%. In accordance with what was discussed at Parliament, it appears that because of this gap in the legislation, many borrowers who may be able to come to an arrangement with their bank in relation to their non-performing loans cannot do so as they are not in a position to pay the tax arising from the deemed dividend distribution provisions. In accordance with the bill, any profit from the write-off of a non-performing loan as at the 31st of December 2015 will be exempt from the deemed dividend distribution provisions for the years 2017 to 2020. We believe that this tax bill is in the right direction since there is no actual profit involved. However, it would be even better if a similar provision is included in the income tax law. Currently, such amount is exempt from tax under a guidance circular issued by the Commissioner, and we all know that circulars are not law and can at any time be withdrawn. Another tax bill aims to increase the amount of the deduction granted for increasing the share capital of Cyprus companies. According to the explanatory statement of the bill, the amendment in the income tax law is proposed so that the existing notional interest deduction provisions are in line with the recommendations of the European Commission Code of Conduct. Under the current legislation, a notional interest deduction is granted for the introduction of new equity employed in the production of taxable income by a Cyprus company or an overseas company with a permanent establishment in Cyprus. The rate used is the yield of the 10-year government bond of the country where the funds are employed, plus a 3% premium with a minimum rate equal to the yield of the 10-year Cyprus government bond, plus a 3% premium. The suggestion is to remove the minimum rate and to only use the interest rate of the country where the investment is made. In addition, it is also proposed to increase the reference rate by 2 percentage points, that is, from 3% to 5%. In addition, the current bill provides for clarifications in the method of calculating the deduction so as to ensure that such deduction is claimed against the relevant income generated from the new capital. It is believed that these modifications will better reflect the spirit of the law and reinforce the approval of the scheme from the European Commission. Lastly, on the local developments, a tax bill was submitted to Parliament this month which proposes a further extension to the law for the settlement of overdue taxes. It is proposed to extend the submission deadline for applications to enter the scheme up to the 3rd of July 2020, in order to facilitate the taxpayers who did not have the opportunity to join within 2019. At the same time, it is proposed to also extend the submission deadline for the relevant tax returns to 30th of June 2020. It will be interesting to see if Parliament will approve such extension. Moving on to some tax treaty developments, Cyprus is currently negotiating with Sri Lanka for the signing of a new tax treaty for the avoidance of double taxation, for which the first round of negotiations was held in Nicosia back in October 2019. The first round of negotiations has also commenced with Poland in an attempt to agree a revised tax treaty. Watch this space for further developments. We will close off today's tax update with a brief reminder of the upcoming deadlines. As there are no deadlines for 30th of November and as we will not have a tax update in December, we will have a look at the deadlines for the 31st of December. 31st of December is the deadline for filing of revised provisional tax returns and payment of the second installment of the 2019 provisional tax. It is also the deadline for the payment of SDC on rents, dividends and interest from sources outside Cyprus for the last 6 months of 2019. By this date, insurance companies must also pay the third and last installment of the premium tax for life business for 2019. And lastly, 31st of December is the last day for filing the CBC reports for 2018 and the CBC notifications for 2019. This concludes our tax update for this month. Thank you for watching, have a wonderful Christmas and a Happy New Year, and see you in January 2020.